Welcome back everyone to the YouTube. In today's video I'm going to be walking you through and showing you how I made $867 today day trading the Nasdaq. I'm going to walk you through high time frame bias, how I got my bias, how I found my draw on liquidity, and then obviously how I entered into the market to catch this trade. So I'm going to just start off with the higher time frame here. So first of all, bias going into the day. So I was bullish going into the day, and I'll explain why. So basically, we had this. If you draw out the fib tool from the top of this range to the bottom of this range, we had delivered absolutely perfectly from the 50%, which is a massively bullish sign. If we bounce from this, obviously this first 4-hour candle after this, massively bullish sign. But not only that, if you go down to the hourly time frame, so at market open we were around here. So in this candle here, let me just draw this out. This candle here, maybe halfway through this one, we had just swept this hourly low inside of a fair value gap and reacted very, very bullishly. We'd held this fair value gap with the bodies, and then we'd started to come back up a bit. I was looking for long positions today. Unfortunately, I did not get to the charts quick enough to take this 5-minute long. Obviously, everything I trade is based on liquidity. However, my entry model is inverses. So I'm looking for a delivery from a fair value gap or a sweep and an inverse fair value gap. So basically just a fair value gap like this one to be closed through. And then I'll target in the direction of my draw on liquidity. So obviously today I was looking for longs. Unfortunately, I did not start my live stream in my Discord until about 25 past. So I just missed the entry to this. I usually start just before market open. So this trade was not taken today, so I was still bullish, but I was extremely patient, didn't want to rush into anything. So obviously I watched this move come up, no FOMO because I wasn't at the charts. So obviously we could have reacted from this high, which was a 4-hour high at the time, which we didn't. We kept pumping. So at this point we blasted through, in comparison to where we delivered from the 50% on the higher time frame here. On the hourly of this leg, we blasted through the 50%. So because of that, I was extremely bullish after that. So then I came down the time frames. What we'd left behind, obviously at this point I was waiting for a pullback into this leg and then a long position. What we were left with was this 15-minute fair value gap right there. So as you can see, we did come and tap into it and mitigate this fair value gap. But more importantly, on the lower time frame, what we left here was this data high. So at 10 o'clock, we had 10 o'clock orange folder news. Now, these candles are extremely, extremely strong draws on liquidity. If you remember what I said earlier about only trading liquidity, that's the main concept. Now, we left these data highs, sorry, not lows. Left these data highs above. In live time, this candle is extremely volatile. We came up and we blasted back down, meaning there are so many orders, also known as liquidity, at the top of this wick. So this was my target. I wanted to pull back and then to target these data highs. Now, obviously, there's inverses here. There was a 30-second inverse up here. Now, the massive difference there is we've not had any pullback, we've not got any delivery, and we've not swept any liquidity. Now, what we did get, obviously, by this point, was a delivery and a tap into this 50-minute gap, which I've just said. So if we just cycle down the time frames here and have a look at the 1-minute time frame, we had this gap right here that formed, which I was looking for once we tapped in. However, I'm always looking for the better entries. On top of this, we had this 1-minute, what's called an intermediate term low. So all this is a low that's formed inside of a fair value gap. We were delivering out of these fair value gaps to the left. So that was super, super nice. We also had a resweep as well on the low there that we created. So super, super good confidence to see it all lining up. So I cycled down. I went down to a 30-second time frame. I was thinking, how can I get a better entry than this 1 minute? Because this 1 minute's very high up in the leg, right? So I was thinking, how can I get a better entry? Now, what we had here was these two 30-second gaps that weren't really big enough for me to take a long off. So what I did was I combined these gaps in this leg So all I was waiting for then was a candle close above these to then long. So once we had all these confluences lined up, on top of this, if we go into the high time frame here, obviously as you can see, at the current time of entering this trade, we had not hit discount, right? So the top of the leg was here, the bottom of the leg was here. We'd not hit discount. But on ES, S&P 500, the correlated pair, we had hit discount. So that was another confluence. We bounced off of discount on ES. And then I was looking at this 30-second entry, entered on the candle close here. So this is where I entered. On this candle close, obviously fully targeting these data highs. So I risked $500 per trade. Stop loss for 25 points. So 10 contracts on MNQ. The reason I'd go 10 contracts instead of 1 contract on NQ, so I can scale. Scaling in my strategy is extremely, extremely useful. Now, I went to break even here. So I moved my stop loss to break even once we hit this high. Because we did have an S&T at the highs and we were looking somewhat bearish coming down. So I wanted to just be careful there. Make sure that we didn't want to reject this high and come back down. Which, as you can see, we didn't. We carried on pumping. I scaled half of my position here at this very obvious high. Scaled half there. And then left the other half of my position to run to the data highs for a 2.4 risk to reward. So I scaled 5 contracts here and left 5 on to the data highs. And that's pretty much the trade that I took today. I don't think there's anything else to cover. It was pretty much perfect. Everything aligned together today. This wasn't too clear in terms of, like, obviously a big, nice singular fair value gap here would have been much, much better. But always jump back to what I said earlier when you're trading. We're trading in terms of liquidity, not fair value gaps. Always be looking at the liquidity. You could have the best inverse fair value gap or the best order block pattern trade ever, but it doesn't matter if it's not in line with the draw on liquidity. And this was, we had so many confluences line up here. Manipulation leg, sweep of an intermediate term low, delivery from fair value gap, good momentum on these 2 candles as well, good break-even point, great draw on liquidity above. So these are the types of things you've got to be looking for. There's also a free checklist in my Discord if you're newer to trading liquidity and trading these setups. You can have a look at that. There's a checklist of everything you need to know and be looking out for when entering into a trade. But yeah, this smash TP, $867. And I'll see you guys in the next YouTube video. Like I said, all the links are in my description. Join my free Discord. Get involved in there. Consider joining the live streams. Everybody in my stream caught this today. I called this out on live. So it was absolutely perfect. And yeah, hopefully this was informative. If it was, drop a like, subscribe, and I'll see you guys in my next video.